Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade Newsletter. Let's get started. What a comeback, right? Market's just been so strong after this coronavirus decline. I mean, you've got this massive rally where spiders have basically recovered about 70% of this drop. And you talk about the NASDAQ, the Qs, we're basically back up almost to all-time high, and that's looks like where we're headed. So, I mean, comeback is definitely much more surprising than I thought. I've been pretty much, on point when it comes to market direction. Where we predicted the decline, we predicted this bounce, but as I have been saying, I did not expect the market to come all the way back up because if you really look at it, nothing much has really changed, right? Lockdowns are still going on. Businesses are going under. A lot of companies are declaring bankruptcy. People are losing, jobs, 40 million unemployment, and it's only going to get worse, especially with the real estate market. It's only going to get worse. So, considering all of the fact that we're back up is, quite surprising to me. Although some of it makes sense when it comes to NASDAQ because I talked about in the last newsletter, NASDAQ is basically all technology related stocks. And guess what? The companies that are doing well in this lockdown are technology stocks because, again, if you have a company that, is something to do with online, something to do with technology, well, that's what's being used more. So it kind of makes sense, you know, where companies are doing really well, technology companies, because well, people, what are they going to do at home? They're going to be online. They're going to be, using technology. So that makes sense, and that's why also you see the S&P has not really recovered as much as the Nasdaq because S&P has a lot of other industrial type of stocks. Same thing with the Dow Jones. If you take a look at the Dow Jones is still below its 200 period moving average, right? And only recovered about 65%. So, there's definitely, I guess, movement of the money going into technology stocks coming out of like industrials and energy stocks. Also what's interesting is small cap sector, that too is below the 200 period moving average. So that's basically to say that, hey, we're not out of the woods yet. I think a lot of people look at this market that continues to goes up and they're like, hey, we're done. Let's just start buying again, and then you're in for a surprise. I really think if you're a long-term person, the buying opportunity was in these zones, right? And I've been talking about that since February and March that this is the area you want to buy, and which I did, right? I told you guys too. I bought a lot of the market right about here, but unfortunately, I didn't expect this to keep going. I got out of all my long-term investments right about here again, and I'm focusing primarily on swing trading now because that's been more productive. And again, if you really look at it in a different perspective, meaning, hey, you put your money in the market in January 1st, right? And you look at your money now, you're still down on your investment if you invested in the beginning of the year. Whereas in the beginning of the year, if you were doing, let's say, every single trade in the newsletter, even if you missed some of these trades, even if you couldn't make some of these trades, right? Even if you got filled like 30 cents late on a trade, but if you were doing this in the beginning of the year rather than putting your money in the market, you would have made a lot more, right? So risking 1% per trade, we're up about 22.4%. If you're risking 2% per trade, you're up about 44.8%. And I want to keep that going. All right, so where do we go from here? Hard to say. I think this is why I just don't want to make any predictions upside or downside. I just know that, hey, I'm a trader. I'm going to keep moving my money, find some longs. Hey, let's go some shorts and just keep rotating our money and making money that way. So honestly, I don't really care, which way the market goes, right? Because we're rotating our money with the newsletter, right? But now, over the weekend, we've had these protests all over America, right? And that protest, could maybe we gap down tomorrow. We'll see, right? I mean, these days it's almost like market doesn't care about any negative news. So who knows? Maybe we go back up again. But the way these protests and thing, maybe we could expect the gap down tomorrow. We'll have to find out and wait to see what that happens. So let's go over some of our open trades. We got 3 open trades right now. We closed a lot of our positions last week, right? Like FNKO. We had raised our stop loss and we got taken out of that for about a 1.36 R gain. And then we had the NBL that we trailed out on for about a 0.65 R loss. We made a small amount of money on the Tupperware. So, a lot of small gains is what I've basically seen. There were a couple trades, like even FNK at one point was up pretty good, but we ended up trailing out for a small profit. Now we got three open trades. I'm still short the S&P, the SPY. Shorted this at $302, and it actually, after shorting it at 302, it went down all the way to about 298, 299, right? But I'm still holding it. My stop loss is still at about 308 area. I'm gonna keep it there. I'm still in the S&P short, and we'll see what happens. I also shorted the bonds, the TLT, Treasury bonds. So I shorted these at about 161.94. Stop losses over 165.68. So, yeah, I mean, we kind of got a failed breakdown, looks like it. I mean, this is what I was trying to short, this little support area that we couldn't get below. Finally broke below that day. A little peekaboo, and then it went right back up again. But I'm in this short. We'll see what happens. Hopefully this thing can fail on Monday and go back down. But again, our stop loss is here. Worst case, we'll stop out. That's the worst that can happen on this trade. Next one on the list, which is one I shorted basically on Friday, is Lululemon, right? And I mean, this one's a little bit aggressive trade, right? Let's be honest. So this trade, a little bit aggressive. It's a counter trend trade, and counter trend trades by their very nature are always aggressive because, I mean, this stock is also to all-time highs. So there's no support or resistance areas. We have to pick it based on what we think. So I gave it an arbitrary stop loss, put it up above at 303.10. It went as high as 301.49 on Friday. My stop is at 303.10, and I'm in it short at 296. And hopefully, if the market gaps down on Monday, maybe this thing pulls back lower and we can lower our stop. But that's the plan. Lulu also has earnings coming up on 10th June. I doubt we'll be in it, for that time because we still got 10 days. But all I'm looking for is just a little pullback back to the 9 EMA, which will be around 277. And, if you get a 280, we're already getting over 2-to-1. So this is a trade where I would say the probability of it working is low, right? But if it works, you get a quick, you get a good reward to risk ratio. So that's the one. That's why I took this trade. Extended stock away from the moving averages, and the reward to risk ratio was pretty good on that, and that's primarily I took the trade, and I'm in this one short on Lulu. All right, so those are the only three open trades we have right now. I was scanning my brains out today to come up with some good ideas. I came up with, two ideas. There's a lot of other stuff, but I only want to take stuff that I, feel really good about. There's a lot of stuff that looks good to me right now. I'm like, yeah, that one has a lot of potential. Yeah, that one has a lot of potential, but nothing I really feel comfortable putting my own money behind, right? And as you guys know, in the newsletter, I only call trades that I personally am going to be taking myself with my own money, right? So I don't call any trades that I don't take, I take every single trade, so I want to only call what I'll be taking myself, right? So that's where we stand right now. Let's take a look at some commodities. Let's start with gold. So gold, as we talked about, in my opinion, eventually it's going to make its way all the way up to all-time highs. But for now, it's in a range, right? We all talked about that in the previous newsletters as well. It's in this rectangle range right now. It needs to get above it before it can get going in either direction. So keep an eye out on gold to get above this consolidation. Next one we were looking at is oil, USO. I mean, USO has steadily been grinding up, but again, just nothing really exciting to me on oil. What's exciting actually has been silver, and I've talked about it for a long time. That, I mean, if you were in the newsletter like a couple years ago, like many years ago, I've been saying, silver at these prices, you can't really go wrong, right? And I talked about it when I used to do the newsletter in 2015, 2016, 2017. I've been talking about it. You get a chance to pick up silver anywhere under $14, $13 on SLV. I think it's a good bet for long term. And if you've done that, even this year, I think I mentioned it right over here, around 14 bucks. If you've done that, you're up a good percentage. And I think silver is, silver, I think to me, especially if it gets back above 18, I think it's going to get ready for a good move to the upside. So you might want to keep an eye out on silver. I think as a long term, any pullbacks around the 14 to 13 area, I think are not a bad bet at all. So that's some of the commodities I've been watching. Talking about US dollar, USD. So you can finally see here, we talked about it. The US dollar has started to break down under the 200-period moving average under this range. So the dollar continues to slide lower. What does that mean? Well, that basically means gold, right? Silver, oil, like they're all start to go up. So their inverse relationship to the dollar. So as the dollar goes higher, commodities will go lower. As the dollar goes lower, commodities will go higher. So that's a relationship to keep an eye on. Along with another relationship talking about, is Aussie yen, Aussie dollar, Japanese yen. So Aussie dollar, Japanese yen is, it's kind of a thing I look at to see the market. So you can see here, Aussie yen has not quite touched the 200 MA, which makes me think that the stock market, the S&P might have one more leg up until the Aussie yen touches the 200, and then we can see some potential decline. What's interesting, however, as you can see here, Sunday, right, Aussie yen actually gapped down, and Aussie yen is a reflection of the market, which means it's possible that the stock market might also gap down. But Aussie yen has started to recover some of its gap down right now, so kind of looks like a flat open for the S&P. We'll find out tomorrow. All right. That being said, I also wanted to take a look at some market internals and see where we're standing on the S&P. All right. So now, if you take a look at the market internals here, the market internals were obviously, this is the McKillen oscillator, by the way. So you can see here, McKillen oscillator was the extreme lows, and that caused the markets to bounce, right? And then right about here, see the market internals got a little bit overbought. We saw some pullback in the market. On this day, market internals hit overbought again. We saw a little pullback. But what's interesting is a small little pullback turned the internals from overbought into pretty much neutral. So we're basically neutral right now, which doesn't really help us because it doesn't tell us anything, right? So that's where we stand on the markets. All right, talking about some stocks here, some new trades that got going on. Again, not a lot in this weekend's newsletter because, to be honest, I am not a big fan of really going long stuff here. I'm looking for some really good short opportunities, but at the same time, if the markets keep going up, shorting is going to be tough too. And also we have the S&P short, we have the Lulu short. So I think we have a decent, short exposure right now. So there are a couple trades I'm going to call. One is a long, one is a short. The first one is HTZ, Hertz Global Car Rental, right? Hertz Car Rental. So they're declaring bankruptcy now on Hertz, and the stock went like went to like 40 cents. The stock went to, right? Then went back up all the way to $1.49. Then it closed basically at an even dollar on Friday. So now if this thing goes lower, guess what? Let it go lower. Who cares? We don't care at all. However, if it starts to come back up, I will start to like it as a potential opportunity. So let's go over to a 65-minute chart. So you see on the 65-minute or an hourly chart, so to speak, we had this move up, right? And now we have this little hourly chart flag. So I think that if it can get back above the flag, I think Hertz could potentially see a move to the upside. So I'm going to take a shot at that one. So I'm going to look to buy this thing if it gets back above. Let's see. I'm going to look to buy this thing if it gets back above $1.25. So $1.26 is where I'm going to look to buy it, right, at $1.26. And I'm going to put a stop loss under 80 cents. So stop loss will be at 79 cents. So $1.26 by stop loss 79 cents. That's where I'm going to be calling HTZ long. As far as what you're wondering, there's a video I have up on our YouTube channel called the reverse 3-bar play. So this strategy would be something similar to the reverse 3-bar play strategy that you guys can watch on YouTube. All right. Next one on the list I have, this is a short one. It's Momo, M-O-M-O. So M-O-M-O, has not participated in this market rally. Market went straight up and Momo was going straight down. Momo recently had a breakdown here, right? Broke down, came back up again, failed, and now it's back up again, but it held these lows. So if it gets under these lows, I think we can get a breakdown to the downside on MOMO. So this one's going to be a short under $19.08 with our stop loss over $21.26. And then we're going to look to see if we can get our target down into $10 on Momo. All right. All right. And then last but not the least, this is a trade I called last week, which we're not in yet, has not triggered yet, but I'm still keeping it active, which is Caesar, CZR, Caesars Entertainment. So this is a call that I have to short under $11.18 with a stop loss over $11.68. So this one has not triggered yet, but if it triggers, I'll still take it. Because we have multiple green bars in a row on a weekly chart touching the 50-period moving average. We got a big decline without a good pullback into the 200 MA on the daily chart. So I'm looking for a small pullback from this zone. So Caesars is still a valid trade that I'm going to be looking to short under 1118. All right. So kind of a short newsletter today, primarily because I don't have a lot of ideas to review or talk about, but we're going to take it day by day. So again, new trades is the HTZ and the Momo, right? Momo is a short, HTZ is a long. You will see the numbers down in here in the newsletter, and Caesar is also a short. I already called that, but I'm going to post it again so you guys know that it's a valid trade. And then apart from that, we're just going to manage our 3 open trades and see how it goes. But overall we're doing good, and it's a good sign because if you take a look, I'll bring it up again. Think about it. We're only halfway through the year, right? Year has 12 months, right? We're in month number 6 now. So we have half the year is already done. We're already crushing it. We're beating any other form of investment out there. And guess what? We got half a year still to go. I think we can double this. That's my goal. We're going to double these returns. So stay tuned, stay patient, put your best foot forward, and I'll see you guys in the next edition of the newsletter.